Hello, my name is Mark Chalmers, and I'm president and CEO of Energy Fuels. And Energy Fuels is a unique company, and I don't actually think there's anybody we don't have a peer group for Energy Fuels because our focus on critical materials, particularly uranium and vanadium and rare earths, is really unmatched in the world. If you're looking at an investment in Energy Fuels, we're in the United States, and we're further ahead in just about all of those categories than anybody else. So it's my pleasure to give you an update on our company.
Mark, good to see you, buddy. We kind of caught up with you and Constantine on the Neo JV that's going on there a couple of weeks ago. I think that was a really nice deep dive into what you're trying to do on the rare earth side. But I want to kind of keep it a bit broader today, if I may. First of all, well done, $2 billion Canadian market cap. Not a bad milestone.
Yeah, look, at every milestone like that is appreciated. So, but Matt, as you know, we've got big plans ahead. So we hope that's just one of many when we start clipping off these $1 billion milestones, because the world is thirsty for critical elements right now, and never in the last several decades. Matter of fact, in my whole career, can I think of a time where people are waking up to the fact that we've become overly dependent on a number of countries around the world that are political foes. So look at interesting times.
Well, we'll get into that in a second, but I want to start off, if I can, with just basically you announced the 2021 results. You made a profit, first time in a long time. So I guess that's positive. You got cash on the balance sheet, you got inventory, you got marketable securities. The balance sheet looks strong. So, I mean, you must be pleased with that announcement.
Yeah, I think in the history of Energy Fuels, and even going back into the days when it was a private company, I don't think we've ever had this strong of a balance sheet. Yeah, I think we surprised people that we posted a profit. Now, that was largely because we monetized some non-core assets. But with the inventories and the values of uranium, vanadium going up, the marketable securities, our cash position, we're very, very pleased with where we are right now, because we're fully funded going forward for the next year or two without any problems at all.
Okay, well, look, let's go back to what you touched on a second ago, which is obviously around the critical minerals list. So those have been around a long time, and people didn't really pay attention to them because, if you needed them, you went out in the open market and you bought them. Recent events, Russian sanctions have changed the makeup in the market. People suddenly realize, perhaps what you were talking about with the 232, when we were dealing with that a couple of years ago, what you mean, and it's starting to hit home. It's affecting prices of the commodities. It's in a high inflation market, it's getting tight out there. So, I mean, obviously it's great for companies like yourself, not so great for the man on the street. But how do you take advantage of this situation? How do you play this market given where you're at the moment?
Carefully. All right. Look, I think that the world is in a pickle right now. I mean, I think the world is finally realizing again how dependent we are on a number of these critical minerals and other materials that we've been receiving from some of these countries like Russia and China. The way we're trying to go forward is just step by step and being part of the solution to advance our activities as quickly as we can, as cost competitively as we can. This inflationary environment we are in is going to catch people off on guard too. Prices of everything are going up, and then you have this pinch point of shortages of supplies, and a lot of things don't work if you don't have gasoline in your car. It doesn't work if it's a petroleum car. So we are going to and I've always used this phrase, be aggressive but not reckless. Have our strong balance sheet, look for opportunities, opportunistically to fill in the voids on what we do on all these critical materials that we are either currently producing or will be producing in the near term.
Okay, you're positioning yourself as a kind of critical minerals hub with a White Mesa mill at the epicenter, right? I get that. But it's worth kind of breaking down the different commodities and how you play them, because they're slightly different markets, right? So clearly you frame yourself also as US's #1 uranium producer, right? So what's happening out there at the moment? I'm intrigued by what's happening in terms of your view on these Russian sanctions and how they play out, because I think as yet Rosatom have not been sanctioned with regards to the enriched uranium. It'd be interesting to see how that plays out in the next few weeks, and how the US is hoping to kind of fill the gap should it put sanctions on Russian or associated Russian uranium.
Yeah, well, it's no secret that, like on uranium, that the U.S. utilities and lots of utilities around the world have become dependent on Russian material in different shapes and forms, including Kazakh material. So, as I said, we're in this pickle, and we want to help be a part of the solution. But it's there's these different steps. You've got the uranium supply, you've got the conversion and the enrichment that all have to fit together, and the world needs to have all three of those steps. Otherwise, you don't have the supply chain established in terms of the uranium nuclear products. So, we are, getting ready to be in a position to restart really soon. Some of our projects, we are actively letting the utilities know that we want to be part of the solution to help them where we can. We only have a certain amount of capacity. But we certainly are established and have facilities that can come online in short order. And so we're taking all those steps. But it isn't going to happen overnight, because when you look at the supply chain coming out of Russia and Kazakhstan, it took years to build that. And so you can't just turn the faucet off overnight. And we recognize that. So we don't want reactors to shut down. But we realize, and I think the utilities realize and the world realizes, that we've become overly dependent. And so we have to start weaning ourselves off as quickly as we can.
But so talk to me about your experience with utilities recently, okay? Because I think it's a very sort of alarming situation for them. We've been trying to work out how they think, how they behave for the past 2 or 3 years, and it's been an absolute mystery. Right now, the Russia situation for them brings us into sharp view the kind of delicate balance in which this ecosystem, this small uranium sector operates. If supply from Russia or associated supply from that part of the world is cut off, what does that do to their decision making? Because the US has you've got a bunch of uranium companies in the US claiming to be able to get into production at specific prices, right? And they've been able to talk that game. And there was no danger of actually having to actually deliver it, because the spot price or term price contracts were nowhere near where the incentive price was. But now it's pretty darned close. So you and others are going to have to move and say, well, right, we said we would. Now's the time to do it. So what does that path forward look like for you or some of the other US players? Is it time to, put up or shut up?
Well, look, I've always said this. It's easier to talk about producing uranium than it is to actually do it. And we have a long history of doing that. I have a long history of doing that around the world. I mean, we're going to kind of look at it in a plank by plank fashion or basis. We have our inventories. We have some alternate feed. We have other sources of feed, plus our mines. So our goal is to kind of to build up our production with a certain amount of contracts that make sense for us right now, and get the flywheel going on our production assets. So. And we kind of look at it in sort of like steps. So, say in the order of like 500,000 pounds steps. So, we're ready to take that first step to secure enough contracts if we can that secure us on the downside and still make it profitable for us to open up a mine or two.
Right. But 2 years ago, the market, as one, it seemed, was saying, right, we need $55, $60 uranium. That's the level that's going to incentivize us to move forward. We're at that. What's changed?
Inflation. Okay. Inflation is really stirring the pot here on terms of what it's going to cost people to go into production. Yeah, we always said north of 50 to 60, and we really need 60 plus. I think those goalposts are moving, and we can still do some in those 50s, but it's changing. And so I think that the realization, and it's not just in the United States, it's around the world where inflation is going to hit. I think people are going to have to add another $10 or $20 a pound over time in the not too distant future to what their expectations, what their costs are because of inflation. So it's dynamic, it's moving quickly. We're in a good position, but we're already seeing things like the cost of reagents going up. Certainly the cost of fuel has gone up dramatically. The cost of people has gone up dramatically. There's shortages of materials. If you can't get the materials you need to put in an ISR project or a conventional mine or process things, you got a problem.
But is this temporary? What's your take on it? Do prices ever go down?
Yeah. Look, it is. Look, we hope it's temporary. Because the world can't just perpetuate 5-10% inflation for 10 years. Now maybe we can, but everything would have to adjust accordingly. So but it's certainly noticeable right now, and I think everybody is out there noticing inflation. Whether you're involved in the mining business or not.
So do you think that we're going to see the utilities catch on to this fact, or are you guys, you producers, telling them this? You're saying, okay, the old number, that's gone. Inflation means we need to add another $10 to this thing to get me incentivized. I need 70, 75, $80 now. How are they going to react to that message?
Well, I think they understand it. They know that they're feeling it. Everybody's feeling it. Okay. And I'm not saying that we have to have 75, $80 for everything we're doing. But what I'm saying is if you got new projects and you're trying to construct a new project right now, not just the inflation on your operating costs, you got inflation on your construction costs. So, I think a number of people that are sitting there thinking that, the numbers that they quoted 2-3 years ago are still valid. I think they need to relook at that because I think they're going to be shocked at how much it's changed.
Well, I think that's for sure. We're seeing that across the board, not just uranium, but all commodities where people are having to redo feasibility studies, or then actually in some cases not rushing to put out their feasibility studies numbers because it might shock the market. I think there's a nervousness with CEOs. Okay, so as far as you're concerned, the utilities are fully cognizant of what's going on in the marketplace. What's that done in terms of the level of conversations that you're having per se? I mean, I assume you're talking to utilities at the moment. They're talking to you.
Look, it's much more active for all the good reasons we know, and you touched on it that the delta. If you go back 3-4 years ago, the uranium spot price was $20 or $22, $23, and people were saying they needed 50, 60 plus to go into production, and now that gap is almost non-existent. It's closed substantially, and so I think that they understand, and this is a different world we're operating in too. When you look at the focus on like ESG and your corporate responsibilities and how shareholders look at that. So it's pretty hard for you to be dealing with other countries that are causing real havoc in the world right now and killing people, and being dependent on that same country to provide you a big material amount of your fuel. But as I said, we are where we are. We are there to work with on our customers wherever we can to try to help bridge this sort of troubling period we're in right now as a world.
But what do you mean by that? You're here to help. You've got product that they want, you're not offering discounts here, right? You're just saying, we want to have a conversation about the best way of delivering what you need. I mean, is that what you're saying? I mean, I'm trying to understand.
Yeah, we're not trying. We're trying to look at what it costs us to go back into production. We want to make money. We're not going to do it for free or at a loss. And how do we get there? So, we just want to have a fair outcome for both parties. But at the same time, like I said, we want to kind of build this in, on the uranium space, sort of like in these 500,000 pound kind of increments per year. And then we can kind of look at, and that's the thing that we have the luxury of, is we have multiple projects. So we can kind of look at it in steps. And we also don't have large, capital construction cost loads to put on top of that. So we're just kind of just building the steps as we go, based on, what the market looks like and what type of commercial arrangements we can achieve, at each of those steps.
Okay, so let's kind of look at some of the other commodities here, because again, bring it back to you are positioning yourself as the critical minerals hub for the US of A. Okay, that's everything spirals out from that. So we've talked about uranium. It's a fairly fluid situation at the moment with uranium. And I guess we'll talk over the next few weeks and months about how that plays out. Vanadium, interesting one. Vanadium, you've got vanadium inventory. You've got the ability to produce more. We've seen, and we've talked to a few companies in the space. We've talked to vanadium companies, mining vanadium miners, and they are finding themselves having to move downstream to kind of try and capture more of the value on this, VRFB battery technology, which people are looking to the future for in terms of energy storage and being able to have longer term storage of energy and and manage energy distribution, etc. So that's seems to be a conversation we're hearing more and more. You're doing something similar in the rare earth space, and we'll talk about it in a second, because we kind of got a good session with you a couple of weeks ago. But are you looking at optionalities around the vanadium, or is this to just sell it into the rebar or stainless steel, wherever you can sell it? Do you want to try and capture value further downstream, or is that just a step too far at the moment?
Yeah, well, we're capturing some of that value right now. And in our financials, we said that we're looking at selling vanadium. We've been selling some vanadium at really nice margins over what it costs us to produce it. And so we've got the ability to go back into production with recycling some of our tailing solutions. We can mine some of our vanadium mines. We've had people kind of inbound us on looking at sources of vanadium flow batteries. There is there's similar to the Sprott uranium fund. There's actually a fund being set up for vanadium as well by Largo, and I think Sprott has some involvement in that as well too. So the vanadium market is also healthy. We plan to monetize some of the vanadium as the price goes up. And again, this is just another arrow in our quiver that others don't have. But then we also look at replenishing that vanadium to always have a nice inventory that we can move quickly. The vanadium market is so spiky that you got to have inventory. And I think I may have mentioned to you long ago that we are basically following the Union Carbide plan. And the Union Carbide always had a substantial inventory of vanadium they could move quickly because it was so spiky. You could never capture that value if you didn't have it on the ground in a drone.
Understood. I just think because it's been spiky, it's a very interesting space, certainly of recent years, and it's been hard to invest in, hard to get behind. But with the Largo ETF, which they're setting up, I'm just interested in the kind of creativity around solutions for smoothing those curves on how you monetize vanadium, and obviously having an inventory is another fine way of doing that too. Okay, interesting times in the world of vanadium, and you've got a stack of it. Rare earth stuff, we don't need to go over too much, Grant. We kind of went into the weeds to say 2 weeks ago, but needless to say, as part of the critical US critical minerals hub, this is a very important part, I think, of your recent value creation. And what's happening in that outside of, just in terms of your JV, but what's happening in terms of the marketplace, in terms of inbounds and conversations from other groups, whether it be US government, whether it be groups trying to understand how they could JV with you?
Well, again, it's very active. I think, as I said in that panel, that the key limiting factor for us at the moment is securing additional sources of monazite sands, because we could be processing probably 10,000 tons of monazite sands, 5,000 REO, which would be like a quarter of a Linus right now if we have the sand. Now, I think we're going to sort that out. We're working on the separation. We've signed up Carrister out of France for a multi-year arrangement to get us through separated oxides. I'm excited about that because we've got the world leaders in the treatment of monazite sands and separation of monazite feeds working very closely with us. When it comes to people calling us, yeah, we're getting a lot of inbounds and right on from the end users, some of the more significant car manufacturers, and including some of the trading houses that trade rare earths. So it's coming together. I wish I could tell you who we're talking to with regard to supplying the monazite sands right now. I hope to, hopefully in this first half of the year, but certainly by the second half, I hope to materially show that we've got the molecules coming into the plant to be a world scale producer of rare earth products at the White Mesa Mill.
Okay. I mean, how hard it's so, I mean, you could go up today and pick up monazite if you pay the price, right? You could go, right, I'm just going to buy some monazite, process it, extract the rare earths, and then monetize that again. So there's an easy fix, but not necessarily the best fix. You're looking for something like more sustainable or sustaining, or a different way of looking at the economics. I mean, what's stopping you literally going out and picking up some monazite tomorrow?
Well, first of all, I don't know if anybody really knows what the price of a ton of monazite is. There's a price that comes out of China, and there's really one person that says what that price is. Well, we are, trying to expand our relationship with Chemours. And, what's interesting is a ton of monazite sand in that 50-60% REO, TREO basis at current prices recovered, separated oxides of the main value chain elements in that ton is now worth $30,000 per ton. Okay. $30,000 a ton. So, if you start looking at, say, the 1,000 tons that we're processing currently with Chemours, and that was short from what we originally had planned on, or they had agreed to. That's $30 million of contained rare earth oxides on that very, very small contract alone. So, but that's assuming you go through the separations. Now, we don't have the ability to do that right now. So a little bit goes a long ways. So, I've talked about, sort of a phase one that I'm looking for upwards of 20,000 tons of monazite sands, equivalent to what we get from Chemours per year. Well, 20,000 times 30,000 is a lot of money. And even 10,000, if we don't get to the 20, up front, is a lot of money. So, we're talking about a very material business opportunity for our company. And we're looking at a number of ways to get there. And, I can't tell you exactly how we're looking at it, but we're still talking to probably a half a dozen people right now, and they're very keen to work with us on that front.
But looking at the economics, does that affect your ability to negotiate? Because they must be looking at this thing and going, well, these guys are going to make a ton of cash. I want a piece of that. That's, negotiations just got tough because, you found a way of extracting way more value than they can.
Yeah. look, we both parties have got to win here. Okay, so we're looking at ways of securing exclusivity of material and having like some sort of profit share. And I said I'm not going to go into details because it can vary depending on the sources and the quality of the material. But we're coming up with some creative ways to show people that we can get to that world scale and still be very, very profitable. So
okay, so that's a more positive. That's a more positive way of framing it than I did. In the sense, I was thinking, well, maybe they're going to use it to twist your arm, but in actual fact, you can use it to incentivize them potentially. Interesting.
Exactly.
Interesting.
The original owner of Energy Fuels used to say, a deal's got to be good for you, and it's got to be good for me. Otherwise, it's not a good deal. So we're trying to collaborate with others to come up with a win-win for both sides. I think that there's some really substantial opportunities there, and I think it's unique to the type of creative approach that Energy Fuels is trying to create value in the things that we're looking to produce on a sustainable basis going forward, and cost-effective basis.
Absolutely. Do you look at where you're at in terms of share price? It's as high as it's been since I've been talking to you. In 3 years, your market cap, I say 2 billion Canadian, very, very nice. You're of a size where you get interesting, for the big funds. So that's a nice place to be. But do you think that it gets difficult now, doesn't it? In a way, because you're now going to have to start delivering all of these things because you've been attributed some value. You're going to need to start delivering these things quickly into this year. And I know your balance sheet looks good. The cash position is strong. And the market is in your favor at the moment, but it wouldn't take much for the market to kind of, reset down. And I'm just wondering, and again, so how do you play it? Because you've always been cautious, but do you continue in that vein, or do you think now's the time to take a chance?
We're always willing to take a chance if we think it makes sense. And yeah, the bigger your market cap, the people start saying, oh, you're overvalued and you haven't delivered. And but I think, we are delivering, but it takes time. And I think that's, people are betting on the future. And, when you look at what we're doing, both, and all the elements that we're looking at producing, I think, we surprised the market on the upside, with making a profit last year. We're going to try to, repeat that or coming close to repeating that this year with some of the trading stock we have. But ultimately, we're going to do what we think is best for the shareholders. When you look at the rare earth producers alone, okay, and we trade as uranium stock, Matt, that. We trade, if we're overvalued, then everybody else in the uranium business is overvalued too. But we are trying to chase the MPs and the Linuses that have market caps of 6 to 8 billion US, not Canadian, 6 to 8 billion US. And as I said, right now, without any additional investment, we can do, at least from a carbonate perspective, probably about a quarter of Linus in terms of REO basis. Now, we still have to do the separation. So we are moving quickly and we're proving what we can do. And as you saw on the panel, I appreciate you having that panel because I think it was a really good forum. Working with Neo and Constantine and Jack Lifton and Brock O'Kelly, we've got a great team, including our people. Our people are great. They're wonderful. They are not afraid to go the extra mile. Matter of fact, a lot of them have worked a lot of late nights, including myself, but our guys on the ground are going for it right now. So, but we have to show that we're getting there. And when we get the molecules, people are going to be able to do the math and figure that out.
Well, I think that's an interesting bit to this equation. It's you've helped us with some of the maths. I guess it's a question of you coming back and telling us how much monazite you've secured and for how long. It's exciting times on that front as well. It's also exciting times on the uranium front for sure. It's a former producer, and with your track record elsewhere in the world producing uranium, I guess you're looking forward to rolling sleeves up and getting back into that. I can't help but wonder what's the order of play in terms of, who's going to be producing, when they're going to be producing, what price they're going to be producing at and what they're going to need to be incentivized to even attempt to. Because there's a lot of talk, and now when the rubber hits the road, you got to deliver, right?
Yeah, and it is going to be interesting. And I think the thing that a lot of investors don't realize is that most uranium projects fail. Okay, they fail. And there are failures coming. There's going to be successes, but there's going to be more failures than successes. So, yeah, the rubber's got to meet the road. There's the cost of new capital for certain companies. There's the technical risks that haven't been fully run to ground. There's the inflationary pressures. There's lack of technical skills. All these things are going to come to roost. And history says, I think there was a study done or a report done by the World Nuclear Association back in about 2008. And it said that of all the people that were promising to produce uranium, only 10% of that production made it to the market, actually. 10%. That's a shocking figure because there were so many fallouts. And I won't go into details there, but there were a lot of fallouts when you look at all the projects that were coming up and coming in. And I think it was maybe published a little later than 2008, but they basically took what people said they were going to do, and then they said, well, this is what actually happened, and it was 10%.
That's a horrific number. And I know the trade bodies, the trade techs of this, what they do try and factor that into the numbers. They discount heavily, but they didn't ever get to 10%. That's incredible and a scary.
It may be higher this time than 10, but I'll tell you, it's not 75%. It's under 50%, and historically it's 10, 20%. But that's what the WNA. And as I said, I don't have the exact numbers in front of me, but it would shock people at the fallout of who doesn't make it.
Yeah, and it's absolutely incredible and terrifying in one breath. I guess that's why the utilities like to dish out lots of small term sheets and not back, one big player until they've, I guess, proved themselves over a period of time. So that's going to be the difficult one for a lot of these companies, hoping to be able to get term sheets if indeed they can. Well, look, Mark. Lovely, fantastically confusing times we live in. It's great for metals of all colors. Yellow doing particularly well at the moment. We will, stay in touch. Well, I'm sure we'll have lots to talk about the next few weeks and months. And congrats on the 2021 numbers.
It's always a pleasure, and it's always look forward to catching up, Matt.